The following is a presentation of TFNN.
11 seconds. You've got 10 seconds. The countdown going on right now. Morrow up to Schultz. 5 seconds left in the game. You believe in miracles? Yes!
Let's go to Ilka in Boston. Ilka, thanks for calling. Thanks for holding.
How are you?
I'm doing wonderful.
Steve, seriously, you guys are unbelievable. You are doing wonders for all the traders.
Well, thanks. We appreciate that.
The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the April 22nd marvelous Monday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and thanks so much for joining me, folks. I absolutely treasure your presence here today, and my outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life, because leading an inspired life, folks, that is what it's all about. So let's go take a look at one of our tools. This is the tool I call Enthusiasm is Contagious. You know, the energy that makes companies tick, the energy that makes you tick, it all depends on individual enthusiasm. Leaders with bright ideas and the ability to inspire thought and action in others, well, they truly are the generator of energy. You know, their individual brand of enthusiasm, well, it rubs off on each of us, and it inspires each of us to accomplish great pieces of work. Henry Ford once said, "Enthusiasm is at the bottom of all progress. With it, there is accomplishment. Without it, there are only alibis." If you study the really successful people, what you will find is they are full of enthusiasm for their work, for life. They're just simply enthusiasm for everything. And their enthusiasm, folks, it is absolutely contagious. I say, approach your daily activity as a positive adventure, because that will lead to inspiring the same attitude in everyone around you, everyone that you encounter. Always remember that what we do for good or ill can be contagious. A smile is contagious, and the sun does not always shine each and every day, but it's always up there. All you've got to do is just peek through those clouds. Incidentally, the derivation of the word enthusiasm, well, it's called filled with spirit. Enthusiasm, folks, is really contagious, and as we like to say around here at TFNN, that is a beautiful thing. Let's go look at the enthusiasm in the markets right now. We've got the futures pointed higher. Dow futures trade out at 14,500, up about 30 points. Looks like the Dow may open up about 20 points or so. The ES Mini trade at 1552, up 4.5 points. Russell 2000 up 3. You've got the NASDAQ futures up 11. King dollar up about 14 ticks right now. Euro down 35 ticks. The yen here is flat. British pound has just some slight movement in it. Gold up $32, trading out at $14.27. Silver up 53 cents, trading out at $23.49. Light sweet crude up 65 cents, trading at $88.66. Our call-in number is 877-927-6648. Would certainly love to hear from you. Give us a call. We can take a look at your stock, answer whatever question you might have about these markets across the pond over in Europe right now. The DAX is trading up 41 points. That's trading out at an even 7,500. FTSE up 16 points, trading at 63.02. Over in Asia last night, the Nikkei up almost 2%. Closed at 13,568. It was up 252 points. The Hang Seng was up 30 points. That was up about 0.1%, a little over 0.1%. And the Shanghai basically flat, down $2. So let's start off by taking a look at what should we take a look at first? Let's take a look at the ES Mini out here. It is trading. If you're watching us on TigerTV, actually, and you're looking at my screen right now, what you're seeing is the four different quadrants of the futures contracts that we're looking at. We're looking at the index futures, looking at the ES Mini in the upper left. We're looking at the Dow futures in the lower left. In the upper right, we got the NASDAQ futures. Lower right, we've got the Russell 2000 futures contract. If you are listening in on the radio or your mobile device at tfnn.mobi, thanks so much for doing that. Remember, you can always catch the live stream of this show by going to the homepage of tfnn.com. Over on the right-hand side, you'll see a button with 3 smartphones. Click on that. This show will stream live to your device, and you can always catch the archive of this on Channel 9. So let's start off just taking a look at intraday. What do we have going on here? Right now, trade out at 15.52. The market neither overbought nor oversold, so it certainly could go in either direction out here. What I'm looking for the market to possibly move into that 1561-ish level, right around 1561. That would be setting up our next Gartley sell pattern. That's right, a Gartley sell pattern. That'd be a 0.786 Gartley sell pattern at that 1561. We've got a nice 2.618 expansion of a set of swing points. Those swing points out here, and a swing point, again, folks, nothing more than where you see a change in trend in the marketplace. That first, the 2.618 expansion I'm looking at is a set of swing points from 6:30 in the morning on April the 19th. That high, 1545.75, all the way down to the low. That was put in at 10 o'clock in the morning out at 1539.75. If you took the difference of those 2 points, multiplied it times 2.16, added it to the low of 1536.25, you'd get right around 1561. So we've got a nice Fibonacci, nice Gartley sell pattern. In fact, if you're watching us on Tiger TV, if I blow this up, it doesn't get any better than this. Of course, the pattern has not set up, so can't exactly say that. But if you look at this pattern, here's where you can take a look. So when I'm drawing these patterns, I'm drawing them in advance. So in advance, I know what it is that I'm looking for. What it is I'm looking for in order to be able to put on the next trade. And then it's just a matter of being patient. It's like going fishing and somebody coming back and saying, they caught too many fish, and here's where all the fish, and you've got to just simply go there. You get to that spot. You just simply have to hang out. You've got to wait because you know that there's a good school of fish out there. Well, really, it works the same way in the markets. We're just looking for patterns. If you're taking a look at this, and it works on the same it doesn't matter what time frame the charts are that you trade. These patterns will set up on those time frames. Obviously, on a 30-minute, you don't have to wait as long as if you were looking at a 60-minute or a daily chart and so on and so forth. But if you take a look at this pattern out here, just to show you the Fibonacci numbers that you just really want to make sure are part of your arsenal, let's take a look at the right here. Let's take a look at the ES Mini when it was trading out at the 5:30 time frame, 17:30 on April the 16th. The high out there is 1570. It makes a run all the way down to the lows here that came in at 1500 hours, so 3 o'clock in the afternoon on April the 18th. That low out there is 1530.75. The first retracement that was really made in our pattern here that we're taking a look at is a 0.382 retracement. Look at that. That's a beauty. That's off of the high to the low. So 0.382, you know that is one of our Fibonacci numbers. On retracements, we're looking at 382, 618, and 786. Well, this pattern here actually has it all. So you got a 0.382 retracement. What happens? That's where the market made a move to the swing point there at 6:30 in the morning, out at that price level of 1545.75. Then what does it do? It backs off, and as it backs off and it made that low coming in during that 10 a.m. session, this was on Friday, look what it was doing. It was making a 0.618 retracement. Hey, there's 2 of our 3 retracements. Now, all that Stevie's son here is waiting for is nothing more than a move to about 1561. That would be the 0.786 retracement. Now, as price gets up there, does it mean that price is going to turn right there on the dime? Absolutely not. That's why you want to make sure that you are paying attention to candlesticks out there, because they will be the sign. It's the bulls and the bears. They've got to show up for work each and every day. And when they show up for work, folks, they are nothing more than professional sign painters out there. And all you've got to do is read the signs, take a look at the patterns that exist out in the marketplace. Now, from an expansion standpoint, that's that B2C set of swing points I'm looking at. That is that final leg there, a 2.618 expansion. That is a beauty. Now, you just simply have to be patient and wait. Does this pattern have to set up? Absolutely not. But what is nice about being able to use leading indicators is that this pattern was drawn well in advance. So I already know what it is that I'm waiting for. And then when it gets there, then I've got to make that determination, okay, is this pattern here getting ready to turn? Because it doesn't always have to turn. And that's where I rely on those professional sign painters of the bulls and the bears out there. You want to make sure that you understand that and that you add that to your trading arsenal, no matter what patterns it is that you trade out here. We can see that the ES Mini right into the midnight time frame here as price was moving up, as the ES Mini got up to 1557. What was it doing? It was traveling where? traveling in that overbought territory. And as you know, you get in overbought territory, it's like getting full from a meal, and you just simply have to digest. And the way that the market is going to digest, it's either going to move sideways or move lower. What has it done really well? You're looking at a range from a high here that came in at that time frame at 12:30 this morning here, out at 15.57. So it's traded as high as 15.57 and as low as 15.52. So about a 5-point range. Really not much of a retracement here. Just simply working its condition off by moving sideways. That is on the ES Mini right now, right there. That's a little hammer candle if, in fact, it were to close here. But it won't. We've got 13 minutes left in the trading session. So that's what I'm expecting. We'll see if that pattern resolves itself. It may do it here during one of the first 2 hours that we're on this morning. Let's go take a look here at the Dow. If we take a look at the Dow futures, as we came on the air on Friday morning, we were showing that we had a pattern that had completed. This was the butterfly pattern. This is the 1.272 expansion pattern. That pattern was that had set up at 4:30 in the afternoon on Thursday as the market came down. And on Friday at about 10 o'clock in the morning, the Dow futures got down to 14,407, never violating that 1.272 Gartley sell pattern, or butterfly sell pattern, I should say, out there. And then what happened? The market moves higher this morning into that about 10 o'clock in the evening. And as it does, take a look at this. Here's the high that we have out here in the marketplace in the Dow. That was at 10 o'clock in the evening, gets up to 14,550. As it's doing that, it's making a 1.618 expansion of a set of swing points. That's a beautiful thing. Making a 0.382 retracement of a set of swing points. That takes you all the way back to the highs here at $2,200 on April the 14th, April the 14th, and making between a 0.618 and 786 retracement off of the set of swing points from 6:30 in the morning out here. This is a beautiful thing. Now all we're waiting for is some type of retracement here. That retracement, let's go see what it's done from the low here at 1:30 in the afternoon on April the 19th. That was on Friday, up to the high that was put in. What we can see here, just slightly over a 0.382 at this stage. You know, maybe a nice little push lower into 14,477, maybe even 14,457. That would set up your A to B equals C to F. But just, you want to, it's very easy. If you can, no matter, even if you don't have this automated tool that I've got on my system here, every charting package has the ability to measure the distance between swing points, retracements, and contractions. So you can draw these on your charts ahead of time and know when price stops at a certain area, go back and compute it. See if there is a Fibonacci alignment that sets up here. When we come back, we'll go take a look at maybe the commodity markets. We'll certainly take a look at the daily indexes. Well, we'll take a look at the Dow, because what happened in the Dow on Friday? That's right, folks. It formed one of your favorite bullish candles and my favorite bullish candle as well, and that was a hammer candle. What's beauty about that is you got a hammer candle coming into this rising trend line. We know that when the Dow breaks that area, and that level would be 14,444.03, it's curtains. Says then the Dow will move all the way back to February 26th. We'll be right back, folks.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of TigerTV. TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. In the pre-market, out with earnings before the bell, we had folks like Caterpillar out with numbers are trading up about 0.8%, up 67 cents. Right now, they close at 80.43. Last trade fired off at 81.10. Checkpoint Software up about almost 3%, 2.6%. They close at 45.29. Their last trade fired off at 46.50. Halliburton, HAL, they're up about 4%, closed at 37.21. Traded out at 38.66. And then Hasbro, the toy company, they closed at 45.02. Last trade fired off at $46, up 2% out there. Let's go all the way out to St. Louis to first-time caller Larry. Larry, thanks for calling. Thanks for holding. How are you this morning?
I'm doing great. Thank you.
Hey, that's great. First-time caller. How long have you been listening to TFNN?
Just for about a week now.
Oh, that's cool. How'd you find us?
A friend of mine told me about it.
Oh, that's great. Are you a longtime resident of St. Louis?
Yeah, about 20 years.
Oh, that's great. What a great city. My parents, when they were alive, they lived there. So it's a nice area. Gets a little hot in the summertime, but what a beautiful area.
Yes, it is.
You wanted to look at the euro. Tell me what you're doing, what time frame you're looking at, how I can help you.
Well, I'm just wanting to get your take on the euro. I haven't made a decision yet, whether I'm long or short on it, but I just kind of want to get some feedback from you on it. I'll probably be making a decision here in the very near future. Just kind of wanted to
go ahead.
I just want to kind of get your take on it.
So when you trade the currency pair, what's the time frame that you typically are looking at when you're inside a trade in the currency market?
No more than probably 30 days.
30 days, okay. I'd say that's a fairly long trade inside the currency market. So right now I'm going to take a look at the 30-minute chart out here, and then we'll go take a look at the daily. So on the 30-minute chart, right now what we're taking a look at is an A to B equals CD down pattern. Now the euro here has made the last pattern that made was an A to B equals CD up, and that price pattern began at the swing point on the 30-minute chart at 1 o'clock in the afternoon. The low out there was 1.3000. That was your A point. Makes its first move up, which was at the 1 a.m. time frame in the morning on April the 18th. Makes a pullback. That pullback there is about a 0.382 retracement. If I take a look at measure, if I go from my A point to my B point, we'll see really just below the 0.382 level. And what ended up forming here was finally the completion, and this was coming in on Friday. This was on April the 19th out at the 10 o'clock area. There was a 1 to 1.618 A to B equals CD up. That was also a retracement of this huge waterfall down leg. That was coming off of the swing point high at about 5 a.m. That high out there was 1.31986 all the way down to that low. That set up what was called a Gartley sell pattern. That was a 0.618 Gartley sell pattern, and now what we're seeing here is an A to B equals CD down. Now the question is going to be: is this going to be a 1-to-1 A to B equals CD down, or is it going to be larger than that? About 60% of your A B equals CD patterns will occur with a 1-to-1. The other 40% of the time, they will be expansions. In this case here, I'm looking at this as most likely being expansion. Why? Because when we take a look at that retracement on this B to C leg here, this says that was only a 0.382, just like we looked at coming off of the bottom. So it looks to me like 1.3. So coming back and testing the swing point low that we were most recently looking at 13 at 1 o'clock in the afternoon on April 17th. That clearly is going to be tested out there. That should put a little bit of pressure in the U.S. markets, and most likely what we'll see is something more than a 1-to-1 A to B equals CD. So that's on an intraday basis. Your next levels on the euro would be 1.2981, and then that 1 to 1.618. If that's the pattern that it makes, just like it did on the way up, would be about 1.29537. Now, if I go and take a look at the daily chart, because you're looking at a longer-term time frame out here. Let's put the daily chart of the euro-U.S. dollar currency pair, and your real sells on this here are when you would see a bounce. So if you're looking for a longer-term trade here, right now it's running into resistance, and the real resistance level on this is right around the price level of 1.3170, somewhere between there and the actual highs that recently formed back on April 16th, Larry. That was at 1.3200. That's the place if you're looking to go short, where I would be looking at going short from a longer-term standpoint. Does that help?
That is a huge help. I really appreciate it. Thank you so much.
No problem, and thanks so much for listening. We'll look forward to hearing from Larry in St. Louis once again. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing TigerTV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow up 30 points right now, trading out at 14,577. S&P up 5 at 1559. Composite up 17, trading out at 3233. We've got 3223, I should say. The Russell 2000 trading at 915, up about 0.3%. Google up $1.42. Apple up $3.50. Microsoft up $1. Intel up 29 cents. Cisco up 11 pennies. Popping to the upside, we've got Netflix. Netflix in the lead, up trading out at 168.37. That's up nearly $5, about 3%. Netflix will be out with earnings after the bell today. Biogen, bib, boy, that thing is a little rocket ship, up another 2.5%, up $5 this morning. Met Products, Met Pro Corp, MPR, not NPR like National Public Radio, but MPR as in Mary, up about 38% out there. What is that all about? I wonder if that is a IPO. That's a TradeNet. No, it's not an IPO. They must be out with earnings out here or some type of stock deal. Let's see. Seco to buy. There we go. To buy MetPro in cash and stock deal. Rand Gold up 292. We've got Google's now down, it looks like. We've got AmTrust Financial. AmTrust Financial is the leader in the clubhouse on the way down, trading off about 370 right now. That's off 11%. We've got Lifetime Fitness off $1. That's down 2.5%. Boy, I can't even. PHG is a ticker symbol. I'll spell this name for you. KONINKLIJKE. How about that? I do not. Doesn't even ring a bell out there. But it's off 4%. That's what I can tell you. You've got Cabela's Inc. CAB off about 89 cents. I want to go back here to the euro real quickly here for Larry in St. Louis. What I've got is a longer term chart because Larry's taking a look at a longer term trade on a currency pair. And a longer-term trade on a currency pair, boy, you want to make sure you're really watching what's going on with your candlestick signals out here. Now, in this case here, we're taking a look at the euro going all the way back. This is a weekly chart again that we're looking at. The week of February 8th, the euro goes ahead and makes a bearish engulfing candle. So that automatically is telling you, okay, now it's ready to retrace. Where does it retrace back to? The euro, and why does it come all the way back into this level here of about 1.275 and stop? Well, it came back to that level because that's the last time where on a weekly chart we saw the the bulls out here. There's a 3-candle formation right here, very powerful candle formation, referred to as the 3-river evening star out here. Our morning star. Boy, I'll get my act together here. Just bear with me. That is a morning star pattern. It's a 3-candle pattern out there. So it takes 3 weeks in order for that candle pattern to form. So that is where the bulls were certainly hanging out. We can see price move down there, and in fact, the bulls showed up, and they showed up by creating this little bullish engulfing candle right here. So where Larry or anybody who would be trading the euro is going to run into an area of support, it's very clear. It is so clearly driven. You don't have to ask yourself why. In fact, you want to know where your turbulence is going to be because you got to strap on those belts out here. And that's going to be certainly at the lows right now. You're looking at somewhere between 1.2744 all the way back to this morning star pattern that created when? November the 16th. Really, you're looking at the low there, which is 1.2659. It's the range. You're not going to be able to go ahead and pick this out by a tick, but on a longer-term trade, that is what you're looking at. Now, what is nice about this here is that if this is the way that the trade is going to work out, no bearish reversal signal here on the weekly chart up at the highs. But if this is in fact the extent of the retracement, which was the high that was put in last week, right in the 1.3200 range, what it's really setting up on the weekly chart is a larger than a 1-to-1 A to B equals CD down. You see, we were taking a look at the ES Mini. We were taking a look at the Dow futures, whatever else it was that we were looking at during that first segment, and we were identifying, it was the euro on the 30-minute chart out there. So we're looking at taking a look at that retracement on your A to B equals CD, if that's the pattern that it is setting up out there. In this case here, inside the euro, really just the same thing now on a weekly chart. And you can see just slightly above a 0.382 retracement. It actually says that once the euro can cut through where the bulls are hanging out, and it'll take some work, that it will make a 1-to-1 A to B equals CD. That's down at the 1.2235 level, but the reality is that the strength is likely showing us that it wants to make more than a 1-to-1 A to B equals CD. The 1-to-1.272 would take the euro down to 1.1969 out there. That will take you into the area here where you last saw the bulls back in July of 2012 at the lows. That's where you saw your bullish engulfing, so you can expect that is really the target area for the euro on a longer-term basis. But, boy, on currency moves, you got to really make sure you've got your money management in place. Otherwise, it'll go ahead and just simply wipe you out. So that is on the euro. Let's go take a look at some of these stocks here that are popping and dropping in the market. I want to really first focus in on some of these stocks here that were out with earnings earlier. So we got Hasbro. Let's take a look at Hasbro. Let me go switch to a different part of my charts here. And Hasbro. Let me see what they actually said about earnings out here. Let's see, Hasbro. They reported a loss of 5 cents versus a loss of 2 cents a year earlier. How about that? Revenues of $663 versus $649. So they did the revenue number, but they must have a cost issue out here for sure. Net loss $6.7 million versus $2.6, and they are being rewarded out here. What the heck is going on? What else we have? I don't see anything else other than there's, their losses widened. They must have some really great vision of what's going to take place here in the future. Let's take a look at the stock chart. HAS is the ticker symbol. It's gapping up this morning, 43,000 shares in the first 10 minutes of trading. So we can see not the most liquid of stocks. And what is Hasbro moving into? Well, it looks like it's coming back into its swing point highs out here. Let's take a quick peek here at the weekly chart. Let me see. Let me switch over to the weekly time frame. Might be a little bit easier for you to view out here. As we take a look at the weekly, you can see the swing point that it's taking on takes you all the way back to May 13th, 2011. That swing point high is 48.42. It's got 4.4 million shares, so way too early in the week to know if it's going to have the volume to take on that level. But what we can see, it seems like most likely what Hasbro is going to do. Let's go take a look and see what the A to B equals CD pattern. But looks more like it really wants to get back to December 10th, 2010. That range is 49.01 to 50.17. So let's see if we had a confirmed A to B equals CD up here. Your B point on this is going to be that swing point from September 14, 2012. That high, 39.98. So let's draw the line across there. We'll go do the same thing here on the volume standpoint. See what happened so you can see here the B point was taken out with volume. That B point was taken out on February 15, 2013. It was 11.9 million shares. The B point on this was that swing point from September 14th. Only 6.8 million shares out there. If we take a look at this little hammer candle, that's where we're going to go ahead and take our A to B equals CD off. If you want to take a look at, always being able to give you signals in the marketplace. This thing has it, on a weekly chart. Hasbro has it all. What's interesting is if you take a look at this candle right here, again, we're looking at a weekly. The week of June 29th is a hammer candle. Then you've got this little doji up here on the following week, July 6th. Market moves back down out here. And what it actually created, it's hard for people to really envision, but this actually ended up being a bullish pattern out here. Ended up being a morning star pattern. And then we got this little piercing candle right here on the weekly chart. So you got July 20th, you get this little piercing candle, and then what happens on the following week? You get a gap up. So take a look at this entire section right here on Hasbro. You may not trade the stock, but it's so helpful to understand the patterns out here and where the bulls are hanging out. And it was just so evident and clear by taking a look at the weekly chart. Now, let's go take a look at the A to B equals CD that was formed off of that hammer candle. And let's take a look at what it is doing. You can see here the retracement. Let's go measure that retracement. Let's go measure that A to B retracement. And it was 8.618 retracement. So 35.05 would have been the number. It got down to 34.91. Gotta love that. I mean, 34.91 versus 35.05 on a projection. Makes a 1-to-1 A to B equals CD as it's doing that. No bears showing up here on the weekly chart. It makes its next move up. You did get this little bearish engulfing right here. This was on April the 5th. But the bulls clearly came back and took charge the following week. And then, of course, on Hasbro here, what we've got now this week, we are gapping up into the 1 to 1.618 level. You gap up into your whatever it is that you're going to trade. Doesn't matter to me what tool, what indicator you might use out there. It's going to work the same no matter what. So it doesn't matter whether you're using Bollinger Bands, A to B equals CD, the Chapman Wave, I'll call it every pattern out there. When you are completing that pattern and you gap up into that completion point, that is telling you there is strength in the marketplace. Gaps, you don't have to fear gaps. In fact, gaps are absolutely your friend out there. All you need to do is just simply fill them in, color them in, because you've got a void of price, but just to try to understand the power of the candle out there, sometimes it's easier when you actually just simply mentally fill in that space, and that will help you to understand the real power behind the move. So, looks like Hasbro here, it is going to, on the weekly chart, it's saying it's going to make a run for its swing point highs. It's going to take it all the way back to that December 10th, 2010 level. That was a lot of time. That was on Hasbro. Let's go take a look at a couple of these other stocks here that are moving and grooving. Halliburton. Let's take a look at Halliburton. Let's see what they were out saying about their numbers out here. We'll go ahead and pull this down. HAL is the ticker symbol. Their total revenue, $6.9 billion versus $6.87. So one of the few that have beaten the top line numbers. Their earnings per share, 67 cents versus 89 cents. So that is not so good. And let's see here. What do they do? What was their net income? A net income is not jumping out at me. Let's go take a look at the stock chart here. And we're looking now at the daily chart of Halliburton. Again, HAL is the ticker symbol. It's trading right now at 38.59. So it opened up just a tad, and it is now trading a bit lower. Halliburton here had a really nice reversal signal, believe it or not, as it was making its high right out here on February the 14th. Just simply was doing it on less relative strength out there. That set up your first A to B equals CD down. Now, let's go take a look on the backside here. Right now, what Halliburton has already done, if you take a look at where it most recently had a sign of strength, which should have been right here on this gap up, which takes you back into the January 24th, January 25th time frame. In fact, at this stage here, your real level of support is going to be the bottom of that breakout session. Now, what I always do, what you always want to do here, remember, these are more guidelines than rules where you're going to follow them directly to the T. And when you're really trying to identify where was the breakout area, you can clearly see that from a volume standpoint. So we see in this case here on January 25th. Now, January 25th, take a look at that volume bar that's sticking out. Halliburton moves up with 32 million shares. Somebody might look at that candle there and say, well, that's not wide price spread. That's why I say you need to fill in that candle. If you fill in that candle, you're doing it from the close of the preceding session. On January 24th, this closed out at 37.81. If you could close this, if you could color this in here between the close of the preceding session and, in essence, where it closed, you would say, yeah, that's quite a wide-ranging bar. In fact, you would be hard-pressed to find a wider-ranging bar other than maybe December 18th inside Halliburton all the way back to its lows off of November 16th. So very strong session. Now, when you're taking a look at where did this really break out from, certainly you want to take a look at that session where the day that it actually broke out, the prior day, I should say. And then what you want to do is take a look and go back and identify the smallest volume. See if there's a swing point down there. And there is. When I take a look at this, I say where it really broke out from was really January 16th. January 16th. So I'd say that the real low on this in order to break through that level would really be that swing point from January 15th. So your breakout range, and that's really what you want to be taking a look at, is where is that breakout range? If you're ever taking a look at getting into an equity here, your range on this breakout is going to be anywhere between $35.77, all the way up to $38.33 out there. And that's why it's so important that when you are going in and entering a trade, that you make sure that you're using that average true range to identify what your stop ought to be. Take a spot, but you're never going to go ahead and be able to buy the bottom tick or sell the top tick. Now, you'll do it every now and then. I've done it on a handful of occasions where it just simply has worked right out to the tick, but that's not what trading is really all about. It's really all about risk management. It's nothing more than a money game out here. Now, in the case of Halliburton, as it was moving back into what we call, support level 1. So what you want to do here with these lines is you want to kind of create, you want to create these different little support levels for you, and you want to measure the volume. What you don't want to see is you want to see volume picking up as it moves down into those areas. Well, if we take a look at the volume on April 17th as it moved down there, 17.5 million shares, followed up by 15.8, followed up by 20 million on Friday here. So you got volume really picking up to the downside inside Halliburton. If we take a look at a possible B point on here, you could take a look at it being the April 5th session, 14 million shares, and therefore that 14 million shares was taken out with volume, 20 million shares on Friday. So Halliburton here could easily be setting up your A to B equals CD down. That would look something like this. And that would take it all the way back to $35 and a penny, but more likely $33.34. 877-927-6648. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. The Dow's off 20 points right now. S&P totally flat out here. Composite up 7. Russell 2000 down 7. Let's go peek in on Apple and Google out here. Let's go see what those two charts look like. We take a look at Google. Google had a nice move coming off of its earnings release on Friday. That move there went from a low of 766 all the way up to a high of 803, closing out at 799 out there. Had some nice volume inside the trade. Google coming back into the area of its earnings report right around the October the 18th time frame. Big volume on that candle session, 12.4 million shares. That high was 759 out there. It looks like Google here wants to at least make a run for its highs again. That would be in the March 6th time frame. Now, let's go put Google back here on a weekly chart. Let's see, because we did have Google break out. So, Google broke out of a longer-term chart pattern here, consolidation area. That was by getting over its November 2007 high. So November 7th, November 9th, 2007, its high, 747.24. Volume out there was 53 million shares. What we can see here is Google has not gotten up over that level on volume. What you'd really like to see is Google come back and test that level, even if it tested on lighter volume and hold. And again, that level really being that swing point from November 9, 2007, 747.24 out there, just to confirm that it is a real breakout. But at this stage here, looks to me like Google wants to go make its run for that March 8th level, and that is in the 844 range. 844, this is the weekly chart, so 844 down to 805. Let's go peek in on Apple, see what Apple is doing here today. Apple trading out at $395.89 after making completing the one-to-one version of the a little bit lower than the one-to-one version of the A to B equals CD down, moving down on Friday with volume of 21.7 million shares. The prior session was also volume of 23 million shares to the downside. You can see here Apple is in the oversold territory. It has spent most of its time here coming off of the highs from September 21st. It spent most of the time below that mid-level of that RSI indicator. Apple has further to run to the downside. It needs to work off, or it should work off, the oversold territory. That's all that it appears to be doing here right now. No different than gold or silver, quite frankly. We didn't look at those stock charts here, but if we take a look at Apple, it's headed back into the lows, at least the October 2011 lows, right around the 354-ish range. 342 would be your 1 to 1.272 A to B equals CD down, and that is the likely target area. If I do go in and we take a quick peek here at gold, we've got gold right now trading out at $14.24, up just a little bit. There was a key reversal trading session that took place inside gold back on April the 18th. So that was on Thursday. What you can see here, though, gold getting into extremely oversold levels here. If you take a look at these moves up, all on pretty light volume out here, gold needs to work off that oversold condition. No different here with silver, although silver has been weaker than gold on this little bounce here. You can see silver really nothing more than really sideways, small-bodied candles as it also works off its oversold level. Both of these have further to go to the downside. They will be making a nice bottom, and it's going to be one of those bottoms that nobody wants to buy other than you and I. Folks, stay tuned. If you are off to start your Monday, have a marvelous Monday, because it is Marvelous Monday. And always remember, you have an amazing power within yourself. And that power is so strong, it'll create a life of abundance, cure incurable diseases, build billion-dollar businesses, paint magnificent masterpieces, but most of all, create fantastic, loving families. Thanks so much for being a part of the TFNN family. Have a great Monday, folks. Look forward to seeing you soon.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.